I think GDP growth will start outperforming. It has been outperforming for some time. Most analysts, including IMF, World Bank, continues to revise their target upwards. So GDP upside is coming. But for stock market, GDP alone is not sufficient. What matters is earnings growth. And for last 6 quarters till September 25, earnings growth has been in single digit, sometimes high single digit, sometimes mid single digit, but not crossing double digit. For markets which were priced at premium to global peers, for markets which were expecting double digit earnings growth, this was unexpected surprise. And hence markets have consolidated stroke corrected. Now it is almost at all-time high level because there is hope that with the GST cuts, economy will get supported and corporate earnings growth will come back. If you remove the three oil marketing companies' profitability, the overall earnings growth for September 25 quarter continues to remain in single digit. But with the festival spending, expectation is that going forward, earnings growth should return into double digit. Market probably would like to see some consistency in performance. And hence, I will say, from a market point of view, FY27 has a better chance of outperformance rather than reminder of the FY26.
But Nilesh, what would the strategy from the government's end be like? Because, there seems to be a very clear focus on propelling and, moving up domestic consumption. You saw that with the income tax cuts, GST rationalization, and then the bazooka from the RBI. Now with the budget just a few months away, do you think that focus is going to continue? Will it be more of the same?
Aisha, as government, they have multiple roles to do. For example, one thing is to find the alternate markets. India runs the second largest goods trade deficit in the world at $250 billion. America is the largest, but we are the second largest. We need to leverage that to find access for our exports. Today, gem and jewelry, textiles, aquaculture, handicraft, all have been impacted by unjust US tariffs. But there will be demand for these products in rest of the world also. And when we are running second largest goods deficit in the world, we should be able to open the access to other markets. Similarly, we have one of the largest domestic access. Many foreign companies can't operate in China, like Google, Amazon, Facebook, X, Meta. Today, they can all freely operate in India. We need to leverage our domestic market to again open up alternate exports market so that the adverse impact of unjust American tariff is reduced. Second, obviously government has to do more of the same. On ease of doing business, several steps have been taken, but still the journey has to continue. There is a need to add Inspector Raj, which is impacting our small and medium enterprises. It is even impacting many of the listed companies. Today also you talked about one company receiving, notices. Now, how many of these cases are real? How many of these cases are just for the sake of achieving your target? We don't know. So undoubtedly, government has to do more of the same and also do more of the new.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.